Yes, this time there has been a claim that XRP could reach $50 within this year. Currently, XRP is significantly fluctuating within the high $1 range, so a price of $50 might indeed sound quite absurd at first glance, especially considering its present market behavior. In fact, claims about $50, $100, or even $1,000 have come up so often that we're used to hearing these numbers, but the reasoning presented this time seems to make things a bit more intriguing. It's not just about technical patterns or wishful thinking, but rather a combination of mathematical analysis and the structure of this market. So in this video, we'll analyze the basis and assumptions behind the claim that XRP could reach $50, as well as the potential risk factors involved. Cryptocurrency analyst Nick Anderson claimed that XRP could reach $50 by December 2025. The reasoning behind this claim is that, based solely on the math and market structure, this figure is theoretically possible. The key premise is based on the assumption that a demand shock will occur if the US SEC approves all XRP spot ETFs, and this coincides with a situation where XRP supply is limited. According to this analyst's analysis, the idea that XRP could reach $50 by the end of this year is not an unfounded fantasy, but rather a logical outcome based on market structure. He especially emphasizes that when these two factors, the influx of new capital due to ETF approval and the shortage of circulating supply, come together, a liquidity gap phenomenon can occur, causing prices to surge rapidly. According to this analyst's argument, if all XRP spot ETFs are approved simultaneously in October 2025, there is a calculation that institutional funds will start flowing in earnest over the following 4 quarters, and as a result, XRP's market capitalization could logically skyrocket. He said that if these conditions are met, $50 is no longer just a meme, but actually becomes a possible path. In other words, while $50 can't be guaranteed, it means that the path to reach it could definitely open up. So, how is such a price calculated? Let's break down the mathematical basis of this scenario in reverse. First, from the demand side, there is a projection that more than $5 billion could flow into the XRP market within the first month after the ETF launch. Industry insiders actually believe that even just surpassing $5 billion in the first month would cause significant volatility in the market, which indicates that the XRP market is relatively illiquid. Currently, although nearly 100 billion XRP have been issued, 35 billion of these are locked in escrow, and a significant portion is held in wallets belonging to exchanges or large holders, so the amount actually circulating and available on the market is very limited. Simply put, the amount of XRP that investors can actually buy and sell is extremely small. In this situation, what would happen if new buying forces worth billions of dollars were to flood in through an ETF in a short period of time? If major players place large buy orders all at once in a market with a shortage of supply, prices could react much more sharply than expected. This analyst explains that if the total inflow of funds through ETFs reaches between $10 billion and $18 billion by the end of 2025, the limited supply could cause prices to surge dramatically in order to balance supply and demand. In fact, it is pointed out that the inflow of funds through ETFs can drive up prices, and this price increase can, in turn, attract even more capital, creating a virtuous cycle. The logic is that once a kind of liquidity flywheel starts spinning, even a small amount of capital can exponentially increase the market capitalization. Currently, XRP's market capitalization is hovering around $170 billion, but for it to reach $50, the market cap would have to grow nearly 18 times to $3 trillion. On the surface, $3 trillion sounds like an enormous figure, but the argument is that in reality, such a market cap could be formed in an instant, with actual cash inflows of much less, around $10 billion. The underlying logic here is that even if new buyers push up the price just a little, the valuation of the entire holdings increases, causing the market cap to expand rapidly. Of course, there are also doubts about whether the XRP market can really expand to a $3 trillion scale within this year. Naturally, there is a lot of skepticism about this. In reality, a $3 trillion market cap would mean that XRP would instantly surpass the scale of Bitcoin or Ethereum by several times and become the #1 cryptocurrency by market capitalization. Because of this, there is also criticism that such a projection is excessive and unrealistic. Therefore, this scenario of XRP reaching $50 cannot be established without several key prerequisites. The most important first condition is the approval of a spot XRP ETF. Currently, more than 10 spot XRP ETF applications have been submitted to the SEC, and it appears that the decision on whether to approve them will be made all at once at the end of October 2025. Leading asset management firms such as Bitwise, WisdomTree, 21Shares, Canary Capital, CoinShares, and Franklin Templeton are already actively working to launch XRP ETFs. Behind these moves is the factor of resolving legal uncertainty. As soon as the SEC officially withdrew its appeal against Ripple in August 2025, clarifying XRP's regulatory status, asset management firms began to act even more proactively. Given the SEC's review schedule, October is expected to become a decision cluster. If multiple XRP ETFs are approved simultaneously at that time, it could create an incredible scene where they all get the green light at once. Of course, if the opposite happens, they could all suddenly turn red as well. However, if the scenario where all are approved becomes reality, ETFs will be launched sequentially starting from the fourth quarter of this year, and there will be a real possibility of institutional funds pouring explosively into the XRP market. The second condition is the full-scale participation of institutional investors. ETF approval is merely a requirement that opens the door for institutional entry. Actual capital inflows are needed to have an impact on the price. Fortunately, the market is already developing institutional infrastructure related to XRP. In early 2025, XRP futures will be launched on CME and Coinbase Derivatives Exchange, paving the way for institutional investors to invest in XRP through regulated futures markets. This is similar to the path taken before the approval of Bitcoin and Ethereum ETFs. Additionally, asset management industry experts like Nate Geraci have mentioned that the likelihood of XRP ETF approval is almost 100%, and they even consider the launch of an XRP ETF within this year as a foregone conclusion. Nate Geraci especially points out that many people are underestimating the investment demand that an XRP ETF could generate. He reminds us that there was skepticism even before the launch of the Bitcoin ETF, but as soon as it opened, over $54 billion flowed in, and Ethereum also saw an inflow of $13.5 billion, setting a precedent. He suggests that the same thing could happen with XRP, meaning that only when both ETF approval and institutional participation are in place can the starting line for the $50 scenario barely begin to take shape. The third condition is the increase in long-term holders and the effect of reduced supply. A significant portion of the funds flowing in through ETFs is likely to be institutional rather than individual investors. Conservative large-scale investors such as pension funds, asset management companies, and family offices are more likely to adopt a medium to long-term holding strategy rather than short-term trading if they access XRP through ETFs. If that happens, the amount of XRP circulating in the market will inevitably decrease over time. Additionally, the release rate of the escrowed holdings managed by Ripple is also strictly controlled, so as of 2025, a maximum of 1 billion tokens per month are being released into the market. In the immediate future, with the amount of new supply entering the market over the next few years being limited, if long-term investors also start buying large amounts of XRP through ETFs and locking them away in vaults, the circulating supply could become even tighter. The main point of the analysis is that only when all these conditions align can this ultra-bullish scenario, driven by a supply-demand imbalance, actually become possible. Of course, it's not all rosy prospects, obviously. We also need to objectively examine the various risk factors that could break the $50 scenario. The first risk to consider is the failure to approve the ETF. If for any reason the SEC does not approve or partially rejects the XRP spot ETFs in October, then the massive influx of funds mentioned earlier will not materialize. Currently, the market sees the likelihood of XRP ETF approval as very high, and some experts like Nate Geraci even say it's practically close to 100%. However, this is still just a prediction. The decisions of financial authorities can always be a variable, and if scenarios like approval delays or rejections become reality, it's highly likely that reaching $50 by the end of 2025 will be out of reach. The second risk is overestimating demand forecasts. Even if the ETF is approved, the actual amount of capital flowing into the market may fall short of expectations. Earlier, we assumed that over $100 worth of capital would flow in, but if institutional investors don't buy as much XRP as anticipated, the impact on price will inevitably be limited. While some believe that the demand for an XRP ETF is being underestimated, no one can truly know whether that demand will be explosive until we actually see the results. In particular, XRP still has lower global institutional recognition and investment priority compared to Bitcoin or Ethereum. A lack of liquidity is also a double-edged sword. In a thinly traded market, prices can surge rapidly when buying dominates, but conversely, if selling prevails, prices can plummet just as quickly. In other words, even minor negative events can lead to heightened volatility. These structural characteristics of the market can present great opportunities, but at the same time, they also pose significant risks. The third risk is regulatory and legal risk. Although the lawsuit between Ripple and the SEC has concluded, that doesn't mean all regulatory risks have disappeared from a global perspective. For example, changes in regulations outside the United States or internal compliance issues within institutions could prevent institutional funds from flowing in as much as expected. Additionally, if Ripple increases the amount released from escrow more than expected, or if major early holders engage in large-scale selling during a price surge, there could be a sudden market shock from the supply side. These factors, separate from ETF approval, can be risk elements that may slow down or even nullify the upward price trend. Fourth, it's also important to consider the risks related to the technical price structure. Some analysts warn that for XRP's long-term upward trend to remain valid, the 1.99 support level must be maintained. Analyst Egra Crypto also predicted that if XRP maintains key Fibonacci support lines, such as the 199 level during major wave correction phases, it has the potential to rise to a short-term target of 3.9 and a long-term potential target of up to $46. On the other hand, if this 199 level is broken, it means that the technical structure will be damaged and could lead to a much deeper decline. In short, if the price of XRP drops sharply in the middle and the upward trend is broken, high targets like $50 will be out of reach. That's how we can look at it. Moreover, the macroeconomy and the overall market trend are bound to affect XRP as well. If the cryptocurrency market enters another downturn in the future, or if the global liquidity environment worsens, it will be realistically difficult for XRP to soar to $50 on its own. Ultimately, it's important to keep in mind that a super bullish run for XRP is only possible if it coincides with an overall improvement in market investor sentiment. In summary, factors such as ETF disapproval, weak demand, regulatory variables, technical breakdowns, and the macro environment could all be red flags for the $50 scenario. From an investor's perspective, it's essential to always keep these invalidation conditions in mind and prepare countermeasures accordingly.